Welcome, everybody. Thank you for joining us today. My name is Sean Moss with Down Payment Resource. We also have in the background Melinda Harris, our Director of Marketing and Communications, as well as Tracy McIntosh, our Business Coordinator. So you've got some DPR team members in the background that are going to be answering questions as we go. We encourage you to keep this interactive and tell us your stories about working with DPA clients, chime in on any misperceptions or objections or obstacles that you have faced, and we'd love to hear those and address those as well. Because today's topic is all about those darn DPAs and overcoming objections and misperceptions about these programs and about using these programs and getting deals done with down payment assistance. We know that there are some difficulties sometimes based on market dynamics, market conditions, inventory. We're going to get into the top 5 obstacles, as it were, and talk about how your peers have kind of contributed to some best practices and solutions. So we're going to share with you the state of down payment assistance and what's going on with DPAs today. Then we're going to get into the top 5 down payment assistance obstacles we've been hearing about over the year, maybe the last year or two. And then present you with the solutions and best practices for overcoming those obstacles as we have collected them and heard them from your peers, real estate agents and loan officers around the country, addressing and combating these obstacles with success. And then we'll talk a little bit about some next steps and best practices and resources that you can use to help make down payment assistance easier. So with that, a little bit about us at Down Payment Resource. We were founded in 2008. We've been doing this for a long time, collecting and curating information about all of the 2,200 some homeownership assistance programs around the country. That includes down payment assistance, closing cost help, tax credits, affordable first mortgages, and more. We have a team of people with decades of experience in mortgage finance as well as real estate, and we're all passionate and emphatic about supporting affordability and about putting solutions out there to help more buyers into home ownership and to expedite home ownership for buyers that are maybe sitting on the fence and don't realize that home ownership is within reach, or they believe in some of the misperceptions that are out there and don't think that home ownership is for them or that they're ready. So we also have tools for mortgage lenders to help make down payment assistance easy. I'll show you a little bit about that later. We have a down payment connect tool for real estate agents and a loan officer version. We'll show you a little bit about that. Real estate agents, if you are a member of one of our MLS partners, you actually have down payment connect for free, and we will show you who those MLS partners are. And then we also integrate down payment assistance information into the listing system for our MLS partners. So again, we'll show you who those partners are. And we have other webinars dedicated specifically to Down Payment Connect and how to make it fun and easy and creative, as well as what we do with MLS partners. So today, let's dive in. Ultimately, we are here to help you connect home buyers to the down payment help they need, to present solutions to what we all know to be almost universally agreed upon as the biggest obstacle to home ownership for so many buyers, which is coming up with a sufficient down payment and or cash to close. So what's out there? What kind of help is out there for aspiring home buyers? Well, first of all, let's start with, there are over 2,200 home ownership programs of varying types. Of those, 74% offer some form of down payment or closing cost assistance. So that's at closing help with down payment and or closing costs. Now, those DPAs broadly, they come in many forms. There are grants, which is that's a true gift at closing, does not have to be repaid, no second mortgage, no lien on the property, no second lien on the property. Then there are second mortgages that have a monthly repayment. So down payment assistance comes as a loan. It's got a 0% or a low interest rate, and it has a monthly payment. However, 64% of all of those down payment programs have deferred payments, meaning you get the loan, you get the assistance at closing, but you don't have monthly payments on that debt for some period of time or perhaps for the life of the loan. Now, that might mean you pay back the down payment assistance in the future. That depends, because 43% of down payment assistance programs are forgivable. maybe not completely, so they could be forgiven in part or in full. And sometimes they are forgiven incrementally over time. So for example, 10% per year over 10 years, that would be one common scenario. Sometimes if the buyer lives in the property as their primary residence for a certain number of years, 3, 5, 7 years, then the down payment assistance loan would be forgiven after that period has passed. So again, even within these categories, there are still varying terms, but when we say down payment assistance or DPA, we just want to make the point that that's a very broad term, and it's used often to refer to any or all of these types of programs. And then in addition to all of those DPA programs, we also monitor all of the affordable first mortgage loans that typically come from state or local housing finance agencies. Those can offer benefits like below market interest rates, reduced mortgage insurance pricing, and higher LTV financing. We also track all of the mortgage credit certificates or tax credits that are available, and those are typically from a state housing finance agency as well. Not every state offers one, but where they are offered or available, we do track and monitor their availability, their benefits, their terms, their guidelines. And to that point, we are tracking and monitoring the funding status or availability of these programs, their guidelines, their income limits, their repayment terms, their purchase price limits, their benefits, all of that. We are tracking and monitoring that at a minimum on a monthly basis, checking in on funding status and so forth. But it's really kind of an ongoing, never-ending effort so that you and your clients and your partners, your business partners, don't have to worry about the details. We track and monitor all of that to present you with current, up-to-date, accurate information about all of these programs. And then, of course, I did skip over, there are some additional programs like matched savings programs, individual development accounts or IDAs, housing choice vouchers, and some other less prevalent or less commonly used homeownership assistance programs, but we monitor them as well. So that's the nature of down payment assistance or homeownership assistance across the country. These programs come from the state housing finance agency in each state. Some states have more than one entity that operates like a state housing finance agency, but there's at least one in every state. Their programs are available statewide. Then you have local housing finance agencies. And those, by the way, are the organizations that offer what we typically hear called bond programs. But again, that term gets used loosely to describe different kinds of down payment assistance that aren't all necessarily bond programs. Nonetheless, we also see programs from municipalities, so cities, counties. We see some programs from employers who offer down payment assistance to recruit or to retain employees. We see nonprofits, housing nonprofits all over the country that offer down payment help, closing cost help, and they're typically doing it in combination with housing counseling services, homebuyer education courses, and so forth. But then you also have the Federal Home Loan Bank Network. You have Community Development Financial Institutions, or CDFIs. You have local housing authorities. You have community land trusts. And there are other types of organizations that provide these programs. We are tracking and monitoring, again, all of those so that you don't have to. But the idea here is to give you a feel for what's actually out there and where these programs come from, where the funding comes from. And of course, I mentioned every state has at least one statewide housing finance agency. But in addition to that, you layer in all the other programs, and there really isn't a market. There's not a city or county in the country that doesn't have some form of assistance available, if for no other reason than the state housing finance agency offers their affordable first mortgages, their down payment and closing cost help, and sometimes even mortgage credit certificates, those tax credits, across the country. Across their own state. So there really isn't a market that doesn't have some form of assistance available, whether it's urban, rural, coastal, inland, north, south, so forth. So we also see that down payment assistance programs are on the rise. We've heard a lot of talk over the last couple of years about affordability and combating affordability, in particular, the down payment challenge. We have seen in our quarterly homeownership program index, where we track and monitor what's happening with all of these programs, we monitor various trends. And one of them is simply how many programs are out there. For the last 3 quarters running, we have seen an increase in the number of down payment assistance programs available on the market. So that means more new programs are coming to market from states, municipalities, nonprofits, and whomever else, meaning not only is there more attention on down payment assistance and on the down payment challenge, there are more programs coming to market to combat that challenge in the market, the county, the state, depending on who the provider is. So there's a lot of help out there. And to give you just a little bit more perspective on trends with down payment assistance, we saw state housing finance agencies have record years in terms of both their mortgage and down payment assistance originations in 2020 and in 2021. Not a surprise. I mean, the market had record years, but that was all purchase business from these housing finance agencies working with down payment assistance. We've seen that volume decline a little bit in 2022 after 2 record years, but we've also seen the market on the whole decline as well, right? So it's not that down payment assistance is less utilized or on the downswing. It's just that the market has cooled off. Now, we also have seen, especially this year and especially in Q1 and Q2, we saw a lot of market volatility with interest rates going up and changing. That created some pricing volatility for some kinds of down payment assistance. But we've also seen down payment assistance providers continue to aggressively enhance their programs to try to keep pace with rising prices and market conditions, i.e. interest rates as well, enhancing their programs with higher assistance amounts, higher income limits, higher purchase price limits, and other benefits to try to keep the doors open for more people to explore home ownership and to overcome the down payment challenge. Now, we also see new state and local programs, as we just mentioned, continue to launch in markets nationwide, leading to an upward trend in the number or volume of programs available. And lastly, over 84% of all of these programs are currently funded and active. That is a normal number. That's not depressed because of market conditions or anything like that. And the reason is not all of these programs are funded all the time, right? Now, from your state, they essentially are all perpetually funded through various funding mechanisms. So your state housing finance agency, unlike in years past, many years past, they don't run out of money. There are some programs that maybe get HUD funding. So a city or a county that gets money annually from HUD to fund a down payment assistance program, they may well run out of money. So they'll get their allocation, and maybe 9 months later, they've expended all of those funds. And so we still track and monitor that program to see when they get money back. So basically the point is, actually for a number of quarters running, 84% of programs funded and active is about where we've been for quite a while, plus or minus a couple percentage points. So still a lot of programs out there, more hitting the market. Most of them are funded at any given time, and we tell you which ones have money and which ones don't. So all of that is to say, down payment assistance is still available. There's a lot of attention on this issue. It's not going away. Now, just to give you a few more gems here, I mentioned we do a quarterly homeownership program index. We're basically looking at trends, like I said, and what's going on with these programs, what's trending up, what's trending down, what are some of the unique characteristics we're seeing out there. So I'll give you a few gems here. 39% of all of these homeownership programs do not have a first-time homebuyer requirement. One common myth that we hear is that these programs are only for first-time homebuyers. That is not the case. There are plenty of programs out there that a recent owner or even a current owner or repeat buyer could utilize, so long as, of course, they are purchasing their next primary residence. As far as expanding inventory options for your potential clients, for aspiring homebuyers, 30% of these programs allow manufactured homes. 28% of them allow multifamily residential properties. So duplex, triplex, quadplex, right? Those can open doors to alternative inventory options. And we'll talk more about inventory here in a couple minutes. But just know that some of these down payment assistance programs can expand the types of properties that can be purchased with their assistance. 27% of these programs are statewide from state housing finance agencies or similar entities. The rest of them, most of them, are essentially local programs. So a lot of different kinds of programs and a lot of different geographic coverage areas, if you will. And then just to let you know, there are 334 programs right now that offer extra incentives or are uniquely targeted to those who have served in the military or those who have or are employed in certain professions. So, for example, healthcare workers, educators, first responders, law enforcement. Now, these programs aren't always everywhere, but there are programs out there that might offer unique or extra incentives for those who have served in the military or are employed in certain professions. So I've put the link here to our homeownership program index, and we'll send the slides out here afterwards. But just that's sort of what's going on with down payment assistance right now. So now we're going to transition. The crux of the event today is to talk about the top 5 obstacles, as we've heard from your peers across the country over the last year or two. And we want to bring solutions to the table, again, as communicated to us by your peers. So these are largely not our ideas. We've taken a lot of the challenges and obstacles and misperceptions that we've heard in webinars like this and in other training events. And we've compiled the list of the 5 top issues that we hear when it comes to working with or using down payment assistance programs. So the first one is inventory. We'll talk a little bit about that, some of the challenges, but also some solutions that we've heard. Then we'll talk about confusion around down payment requirements. There is a lot of confusion, especially around that magic number, 20%, where buyers think they have to have 20% down to buy a home. But we're going to dig into that in more detail and talk about how to clear up that confusion for aspiring home buyers. Then we've heard for the last year or two that sellers are hesitant to accept a contract offer with a down payment assistance program, or quite frankly, an FHA loan, or in some cases, a non-cash offer. So we're going to talk about that a little bit more. Maybe that has cooled off a little bit and sellers are starting to open their minds a little bit more, but that's a very recent trend, and you may not all be seeing that in your respective markets. So we'll talk about that a bit. And then we're going to talk about the idea that down payment assistance is going to extend or delay a transaction. That does not have to be the case, and we'll talk about where that misperception or that sad reality may come from sometimes. And then, most importantly, perhaps, we're going to talk about agent and loan officer partnerships and the impact of a lack thereof, as well as the benefits of strengthening them. So with that, let's dive in. Number 1, inventory is limited and unaffordable. So the problem here is, for a while now, we've seen historically low inventory. Days on market has been collapsing and decreasing, creating even further challenges, especially for financing buyers. Yet we have enormous demand, and we've seen enormous demand over the last couple of years. We keep hearing more and more that, you know, the next generation of buyers we're not even talking about millennials anymore. Now we've got another generation of potential home buyers coming right behind them, hitting their potential home buying years. So there's enormous demand, but obviously limited supply. And it may feel at times like very few solutions contributing to supply. So we're going to dig into where might some alternatives be. And then, of course, we've had this rapid and rampant appreciation over the last couple of years. Now, again, maybe that's cooled off in some markets, and you guys are all over the country. So you'll know in your market what's going on with home prices and the pace of appreciation. But if anything, it's just cooled off, right? That doesn't mean price decreases. That just means appreciation has slowed. And so all of this means that buyers are struggling to compete. And what we don't want to see is that if they need some down payment help or benefit from a down payment assistance program, that they suddenly can't compete simply because of the way they're financing their home. So what can we do? So that's what we want to do, is we want to pose the problems here and then talk about the solutions, as we've heard from your peers. We've heard a lot of agents across the country talk about alternative inventory sources. So a few examples. In many municipalities or many markets, there might be local housing agencies or nonprofits or even the municipality themselves that have agency-owned or city-owned properties, and they may use funding from HUD or other sources to acquire those properties, Maybe they're blighted properties and they'll redevelop or rehabilitate those properties, or maybe buy vacant land and build homes at affordable prices and sell them at market or at cost. Those are opportunities, few as they might be, but those are opportunities to explore alternative inventory solutions for some buyers. So good to be connected with those local agencies, organizations, nonprofits, or municipalities that may be engaged in that kind of business. There are community land trusts all over the country, and there's been more attention on this community land trust model as well. But essentially, in a land trust, essentially somebody, whether it's a municipality or whomever, owns the land and they sell the home. Now the buyer doesn't necessarily get all the benefits, the full benefits of appreciation down the road, but the biggest benefit, the most obvious one, is they only have to pay for the structure and the value of the structure when they purchase that home. They're not paying for the price of the land, so it's sort of a discount on the property and can lead to the opportunity or pathway to home ownership by finding inventory at lower costs. So good to look into where those land trusts are in your market and become familiar with how they work and what their inventory looks like. Then you have homes that might need maybe minor repairs. Now, we're not talking about a hole in the roof or asbestos infecting the basement, things like that. Those aren't minor repairs, right? But maybe it's a little dated or needs a little TLC, and it's been on the market for a while. We've heard agents talk about, there's a batch of homes that didn't sell in the first week or two or three when they hit the market, maybe because they need a little TLC and they're not necessarily the most attractive. Now, we want to keep in mind, if we're talking about a first-time home buyer, they're not going to have but so much money to deal with major repairs, but minor repairs, cosmetic things, maybe that can turn into a fun project, and that can open the door to homes that maybe won't cost as much. And while they need a little bit of rehabilitation or TLC, opens up another inventory outlet, right? Then coming soon properties. Now, this is treated differently in different markets, but get connected with other agents and figure out where those properties are that maybe aren't listed yet, but are coming soon, so that you've got a few more opportunities or options for a client to investigate. And then we actually mentioned a few moments ago, some of these programs, these down payment assistance programs, can be used for 2 to 4 unit residential properties or manufactured and modular homes. So think about a scenario where maybe you've got a buyer that wants to buy, and maybe the single family inventory is a little low or fast paced, moving quickly. Are there any duplexes on the market? Maybe we don't always think about that for a first-time home buyer, but as long as they own or occupy one of those units, they may even have access to down payment assistance and could cash flow the other unit. So again, another inventory alternative, right? Not saying that each one of these scenarios or any one of these scenarios works for every last client, but each one of these can present maybe a little bit extra inventory that an aspiring home buyer could consider. So those are some inventory alternatives, but also we need to make sure we counsel the buyer about what this process and the competition will look like. What's it going to take to win? How are people winning their bids in your market today? And then don't forget, of course, explore down payment assistance. Also, if there are mortgage credit certificates in your market, explore those. Some of those mortgage credit certificate providers will allow the lender to annualize the value of that mortgage credit, or that mortgage interest credit, and offset income, basically increase qualifying income based on the value of that, the annualized value of that tax credit. So, and then there are affordable first mortgages and other programs that we track as well. And don't lose sight of those, because those we'll talk about some of the benefits of them, but they can open the door to alternative financing scenarios and solutions. And then, of course, we heard from one agent, this was in Houston, the idea of calculated patience. Narrow down the buyer's list of must-haves and open the door to a little bit of flexibility in terms of what they need to have in a property, and then make sure that all of the financing and everything else is worked out so they are fully and completely prepared to strike when the right property hits the market. So that's the inventory issue. Now let's move on to number 2, confusion about down payment requirements. This one is a little frustrating because the confusion comes from, well, maybe a bunch of different places, but it festers with aspiring homebuyers such that they sideline themselves from the idea of home ownership because of misperceptions about what's required. For example, we participated in a study with the Urban Institute a couple years ago about barriers to accessing home ownership. As part of that study, the Urban Institute surveyed potential home buyers. These were millennial renters at the time, and they asked them a few questions to kind of get a feel for their understanding of the home buying process. So I want to share two of those questions and responses with you. When asked how much those aspiring home buyers thought they needed as a down payment, 65% of them thought they had to have 15 or 20% down or more. We all know that you can get an FHA loan, a VA loan, a Fannie Freddie conventional loan, at 0, 3, 3.5, 5% down. The problem is way too many aspiring home buyers don't know that. They actually think they have to have 20% down. And think about, when they go do a property search, a lot of websites will show a really cool payment for this really cool property. But then when you dig into it, it's assuming 20% down, right? So that just sort of fuels the notion that for an aspiring home buyer that you have to have 20% down. And then the other response to that survey that I want to share is when those millennial renters were asked if they were familiar with low down payment programs, meaning an FHA loan, a conventional mortgage at 3% down, 5% down, VA, USDA, if qualified, 76% of those millennial renters had little to no familiarity with those low down payment mortgage programs, which isn't surprising because they also thought that you had to have 15 or 20% down payment. So the problem is that home buyers aren't familiar with down payment requirements. They're not familiar with industry terms and guidelines. And so they sideline themselves. They exit the home ownership journey. They exit the home search. They don't go get pre-qualified and talk about what truly is possible. And a lot of it hinges on that magic myth, the idea that they have to have 20% down. So given that problem, we obviously need to combat the misperception that you have to have 20% down. We need to make sure that our marketing messages, that our collateral, that our social media outreach, that we are detailing for an aspiring home buyer that they don't have to have 20% down, that they could do it with 3 or 3.5 or 5%. If they're a veteran, 0% down. It's shocking how many veterans don't know they have access to a VA mortgage. Likewise, USDA. We need to make sure that if you're in a market where there are USDA eligible properties, that buyers know that there's an option to use a USDA loan. So some of this might involve getting outside your bubble. But if you are willing and you see this as a growth opportunity for your business, or for any loan officers on the webinar here today, if you're looking for an expansion channel to grow your purchase pipeline, then educate yourself about just a small few down payment programs. You don't need to be an expert on every last program in your market. If you're a loan officer, 1 or 2 or 3, that's enough. If you're a realtor, same thing. And you don't need to be an expert. Just what are the benefits, the basic benefits, and where is the program available? And familiarize yourself with the basic details. We provide that to you in a number of ways that we'll talk about here later. But if you're willing, get outside your bubble, learn about these down payment assistance programs, and incorporate that into solving for these other obstacles. And then expose those to your clients. Talk about those DPAs. Tell a story of a past client that you helped with a down payment assistance program. That is such an awesome way to reach a wider audience and to resonate with those aspiring home buyers, is to tell them the story of one of their peers that you were able to help into a home, especially their first home, with down payment assistance. But of course, we also understand that getting outside the bubble is getting outside your comfort zone. So maybe the option is to stay in your lane and consult with your peers and consult with other loan officer partners and leverage tools like our site, downpaymentresource.com. Talk to local DPA providers. Talk to your state housing finance agency about their programs, their participating lenders, the benefits of their programs, how to recognize an opportunity, and even attend a homebuyer education course. Buyers by and large, have to complete a homebuyer education class in order to qualify for most down payment assistance programs. It would be a great idea to attend one of those courses, maybe with a client, and hear the message that your clients are hearing. Hear what they're learning about the home ownership journey and about successful home ownership. So hopefully that helps kind of clarify, at least what your peers are saying about combating this notion of 20% down and confusion about down payment requirements. Now, number 3, this has been a big one for the last couple of years, and the extent to which this is still currently an issue, I would defer to you and your local market expertise. But we've heard a lot in the last year or two about sellers' apprehension about offers with even FHA financing, not to mention down payment assistance. Problem is, a lot of agents misunderstand DPAs, or the seller themselves misunderstands the DPA program, or DPAs at large, not to mention a specific one. And then, of course, a bad past experience with a down payment assistance program or a transaction that involved the down payment assistance program, that can sour current attitudes. And we get that, we understand that. But let's also think about, well, what really caused that bad past experience? Was it, the DPA program was brought on too late? It wasn't investigated up front. Was it a loan officer new to DPA? Or maybe they switched loan officers because they found out they had to use a DPA. And there are so many different ways that a transaction can go wrong, and that's part of the point here. But and we'll dig into that a little bit more later. But there's also some concern, at least among some of your peers, that a contract offer doesn't frame a down payment assistance as a value add. And then we know that sellers, of course, fear delay. And we also know that sellers and listing agents, they're looking for certainty, right? And they associate a down payment assistance program with a lack of certainty. We would counter that if a buyer is completely pre-qualified or completely qualified, even with a down payment assistance program, that's certainty, right? It's a different financing scenario, but they've been underwritten and qualified. That's certainty. Nonetheless, that's an opinion probably, and we can disagree on that. But what can we do broadly about sellers that are refusing offers that include down payment assistance? The most common feedback we get, often from agents, but increasingly from loan officers, is that agents and loan officers need to leverage their reputation as DPA experts. And what agents tell us is, my loan officer will get on the phone and call the seller or call the listing agent and tell them, look, I do this DPA program all day long. I'm an expert at this program. You guys wrote a contract that has X number of days to close, and I'm going to close on time. Simple conversation, but that's the loan officer going to bat for the borrower, as well as going to bat for the agent. And loan officers on the phone, I hope that you're doing that, and I would love to know if you agree or disagree with that practice. But we've heard a lot of loan officers over the last year or two tell us that, yes, that's what we're doing. We will absolutely get on the phone and go to bat for our client, as well as simultaneously going to bat for our agent partner, and let that seller know that, hey, look, I do 10 DPA transactions a month. I know what I'm doing. I know this program. I know the people that provide it. I know the process. I know the conditions and requirements. You're good. As a seller, you're good. We're going to close on time. And we'll hear loan officers tell us all the time, depending on the program, but for most DPAs, they're not worried about extending the transaction because they know the process and they know what to get done up front. Now, also, don't fear an emotional plea. Now, this may be handled differently in different markets as well, but something simple like, hey, help this teacher move into a home close to the school where he or she is going to teach. Don't fear the emotional plea either. Leverage the value of a down payment assistance program. Now, over the last couple of years, sellers weren't paying closing costs for anybody, basically. Maybe that's changing. And again, I defer to you, your market. But if a down payment assistance program allows the funds to be used to cover some closing costs, then you don't have to ask the seller. That's more net proceeds for the seller. And if we're in the middle of a market shift and we're seeing buyers gain more control, I'm sort of postulating we're we're in awkward times here, but that could be a big benefit. And that's one we've talked about for years in hot markets and cold markets. Some of these programs allow the funds to be used for closing costs, meaning your buyer doesn't have to go ask the seller to do so. And then, of course, down payment assistance can open the door to conventional financing. So consider this scenario. You've got a buyer who is on the cusp trying to get qualified for an FHA loan, trying to come up with 3.5% down. What if a down payment assistance program offered 3 or 4 or 5% in down payment help? Now you can open up the door to a conventional loan, no upfront mortgage insurance premium, reduced monthly mortgage insurance pricing, lower LTV. All of this compounds to lower the payment, right? To lower the qualifying ratios even. So the down payment assistance program itself, that single factor can open the door from FHA to conventional financing. And if sellers are apprehensive about FHA financing, this is another leg up for a buyer who can get into that conventional financing scenario and present the contract accordingly. Also provide assurance the deal will get done. So as I mentioned, loan officers, get on the phone, call the seller, call the listing agent, go to bat for your client, and you're simultaneously going to bat for your agent partner. But in order to do that, make sure you understand the DPA requirements of the down payment assistance program you're using. Prevent avoidable delays. For example, there is absolutely no reason that a buyer using down payment assistance should be taking their home buyer education class the week before closing. That should have been done before they went and signed a contract. And that certificate of completion is good for a year in most cases. So quite frankly, if you have a client, whether you're a loan officer or an agent, and you think they would benefit from or use down payment assistance, have them take the home buyer education class now, and then go get pre-qualified, and then line up the right down payment assistance. And there are some other avoidable delays. Certainly another obvious one would be if you've signed a contract and now there's a cash to close issue, it's not the fault of a down payment assistance program that a transaction has to be extended because you added a down payment assistance program. Let's be frank, that's the fault of the professionals involved for not exploring cash to close, or quite frankly, the buyer for not managing their cash to close while they were in this real estate transaction. So again, there are avoidable delays here that often that often cast blame on the down payment assistance program itself, the presence of a DPA. But a lot of times it's just not getting those little steps done earlier in the process when they could easily have been done. And then, of course, commit to appropriate timelines. If you know you need 45 days for a particular down payment assistance program, think about this. Is that buyer going to buy? Is that transaction going to happen? Are commissions going to be earned if we can't extend to 45 days and get a particular buyer done? Now, of course, if the transaction doesn't come, you move along, right? But if you've got one and you're close and you need to use a particular down payment assistance program, set those expectations. And then lastly, don't disclose more than you have to about financing. Every state's got different disclosures and so forth, but what's required, put it on there. What's not required, your peers have told us, don't disclose. Just disclose what you have to about financing. All right, next up, down payment assistance extends the transaction. We hear a lot, almost as if it's inherent with a down payment assistance program, that it's going to delay a transaction. It will take longer to close. So anything can cause a delay, not just the down payment assistance program. I just mentioned a few scenarios. Cash to close was not fully investigated up front or documented up front. The down payment assistance application was started later or too late in the process. Homebuyer education was not completed early on. And sometimes it's simply a miscommunication or lack of communication about some of these requirements among those parties involved. So it is not inherent in a down payment assistance transaction that it will take longer. Loan officers that do a lot of volume with down payment assistance programs, they know the requirements. And as I mentioned earlier, they know the process, they know the program, they know the program provider, they know the nuances that need to be done. So, how to calculate income differently, if that's the case, getting the home buyer education class done. They know these things. And a loan officer who does a lot of volume with down payment assistance will tell you Most of those programs, they can close in the same amount of time as any other transaction, just as if you were putting 20% down. Now, it takes a little more for them and their team to process, underwrite, and close that, but they can stick to that timeline. So know the down payment assistance program that you're using, set proper expectations about timeline, about application periods, review periods, homebuyer education class, get that done early. The certificate's good for a year. There is no reason to wait. Make sure that everything else falls into place, right? It's not always the fault of the down payment assistance program. We've heard a lot about appraisals, FHA and Govy appraisals taking too long, right? Too many conditions. So ensure timely order of the appraisal, inspections, insurance, and so forth. Make sure title, seller, and lender are coordinated. And then agents, all of this basically amounts to work with loan officers who know down payment assistance programs well and can commit to closing on time, at least for those transactions, right? We're not saying they're going to get all your business, but align yourself with a loan officer who knows these programs, and you can pull more buyers off the sidelines knowing that you're aligned with a loan officer that can help them finance. Now, lastly, we've sort of been hinting at agent and LO partnerships. The biggest problem we see, and I haven't checked on the chat and the Q&A yet, is that agents struggle to find loan officers that offer down payment assistance, that are good at down payment assistance, and that want the down payment assistance business, those first-time home buyers or whomever that need help. So they got to offer it, be good at it, and want that business from you. We hear daily from agents that are struggling to find loan officers that meet those criteria, even two of them, right? So loan officers, that tells us that one of the problems out there is if you offer these programs, you're not promoting it. Let realtors, let your broker partners, let builders know that you offer down payment assistance, and highlight your expertise with DPAs and open up that channel for you, but also for them. Highlight the DPA programs that you offer. Which ones do you offer? What are the benefits of those programs? And in order to do all that, you have to be active in the community. We're in boots on the ground mode, right? We're in hit the street mode, get out in the community mode. The phones aren't ringing off the hooks with refinances anymore. So I've broken this down to agents and loan officers. Agents first, what can you do? Talk to your current loan officer partners about down payment assistance. Maybe it hasn't come up. Maybe they offer these programs and you guys didn't have a client that needed it recently. Maybe they have some of those down payment assistance programs and it just hadn't come up in conversation. So talk to your current LO partners. Ask your broker for recommendations. Ask your peers. Who do they work with? Have they worked with anybody recently that they know is good with down payment assistance? Educate yourself on a few down payment assistance programs in your market. Not all of them, right? One or two or three. Even one is a start. Maybe go to a homebuyer education class and listen to the content there so you can incorporate that into your marketing and into your outreach. Seek out new loan officer partners. If you don't have one that works with down payment assistance programs, seek them out and test their knowledge. We've heard a lot of agents who get a little savvy with down payment assistance will tell us that they'll go test a loan officer's knowledge once they have built up their own knowledge. Court loan officers that teach homebuyer education classes. If loan officers are teaching those homebuyer education classes, they're probably also participating in and doing volume with down payment assistance programs. So find those loan officers, connect with them. Talk to the down payment assistance providers. Ask them, who are your best loan officers? Who does the most volume? Who submits the best loan applications to you? Who consistently closes on time? Ask the provider of the down payment assistance who their top loan officers are. That's another great place to get connected to a loan officer. And then court other agents that list affordable properties. Get on their mailing list. Expand your inventory options. Find those coming soon listings and work with agents that are listing and selling properties in the price bands that your first-time home buyers would likely buy. Stay in contact with them and build those relationships. So agents, hopefully that helps. Loan officers, become a DPA subject matter expert. This is a great way to build your purchase pipeline, a great way to strengthen or add value to referral partnerships and relationships. Attend a DPA provider's training course. Your state housing finance agency would probably love to come into your office and train you and your teammates on their DPAs, and other DPA providers would likely love to do the same, right? They want lenders who can offer these programs and are good at them and committed to them. And then you can incorporate that down payment assistance program or information about them into your marketing content. Obviously, you might need to get some approval from your marketing team. Nonetheless, give it a shot. See what's already out there and see what you can get your marketing team to allow or enable. Proactively work with your product development staff. Are you in touch with the product team or secondary marketing or capital markets? Whoever controls the down payment assistance program decisions, work with them to help identify programs that are available in your market. We have tools to help them do that, and figure out the ones that work best and that you can onboard and start to offer. Host virtual seminars or even in-person seminars with DPA providers. State housing finance agencies love to do that kind of thing. Partner up and offer seminars to help educate real estate agents as well as consumers. Get active in the community, right? We're in boots on the ground mode. I just mentioned that. Local unions, employers, faith-based organizations, builders, realtor associations, housing counseling services. Are you involved with these people? Are you connected? Are you engaging in dialogue with them and figuring out ways to partner with them? Leverage social media, be online when your agents are working. And then lastly, craft an intake strategy with your agent partners for these new buyers. Make sure that the agent knows, hey, this buyer's going to have to take a home buyer education class. Let's go do it today. Let's do it this weekend. Let's not wait. While I get them pre-qualified and get their documentation going, help me get them into that class and get it done. What is the buyer's initial homework going to be? Set expectations about the down payment assistance program and what that might add to the process, so the buyer and your agent partners know exactly what to do up front, and your agents get used to how to handle an incoming buyer that's using these programs. So, agent LO partnerships. We also want to invite you to join the Down Payment Insiders group on Facebook. There are over 10,000 real estate agents and loan officers all over the country, and there are even some DPA providers and counselors in there, but they are sharing best practices, challenges, stories, successes, marketing ideas, all about working with first-time homebuyers and working with down payment assistance programs. And most importantly, they are networking with each other in this group. So we have built this group originally to do the former, to share stories and best practices and ideas for overcoming DPA challenges. But more recently, this has turned into a forum where agents are coming here to look for loan officers that participate in down payment assistance programs in their market. And loan officers are coming here to meet the agents that need that help and to serve them. So we encourage you to join in, network there, and hopefully build some new relationships. Now, I gave you 5 obstacles and we talked about solutions. Our main takeaways are: explore creative inventory alternatives. Make sure buyers understand they don't have to have 20% down. There are plenty of other paths to home ownership. Leverage the value of a DPA. It helps reduce LTV, opens the door to conventional financing, improves qualifying ratios, can cover closing costs, right? Those are all unique values of a down payment assistance program. And then set buyer expectations and, quite frankly, agent expectations, and prepare early. Get all the things done that you can do early: home buyer education class, pre-qual, explore cash to close, set up the DPA. Don't wait. That's where delays come from. And then create innovative and creative and productive agent and loan officer partnerships. And bonus, as I just mentioned, join the Down Payment Insiders to do so. Now, I will leave you with one more challenge, and I added this because we've seen a stark increase in obviously median home prices and obviously interest rates. But I want to point out a particular challenge that creates for buyers, aspiring home buyers, that we can mitigate. So this is from the Federal Reserve Bank of Atlanta, their Homeownership Affordability Index. I compared June of last year to June of this year, which is the most recent date or data available. And we were looking at the housing ratio, just in income to housing payment this is for a median priced home being purchased by a median income buyer or household. So they're at a median income buying a median priced home. A year ago, their housing ratio was at 31.9% out of the gate. That's just the housing payment, right? The front end ratio. as of June of 2022, they're at 44.5%. That is a massive, unprecedented increase. And it means they're teetering on the edge of qualifying ratio eligibility just with the housing payment. So then you think about, okay, what about a car loan, student loans, credit card debt? Those are going to have to be factored in when you look at the total debt to income ratio. So knowing this, there's another challenge that buyers face. Now, that's not a DPA obstacle, which is why I didn't include it in the rest of this webinar. But I did want to point this out because that is a stark contrast to a year ago, and it presents an affordability challenge that is difficult to overcome. But after everything we just talked about, let's recognize down payment assistance programs can absolutely help mitigate this challenge. If you are using down payment assistance, as I've described in a couple of scenarios, you're lowering LTV, you're potentially improving mortgage insurance pricing, maybe even improving rate. All of this is reducing the monthly payment, the housing monthly payment, and that is therefore reducing qualifying ratios. So again, we just want to point out there are a lot of obstacles, a lot of misperceptions, and a lot of true, real, legitimate challenges that we can address with down payment assistance to build our purchase pipeline. And quite frankly, to help more buyers get into homes. And let's also remember, DPA customers become customers for life. Nobody forgets getting into their first home, especially the agent and loan officer that helped them with down payment assistance. And that becomes a unique referral source. They will absolutely refer their peers, and they will absolutely come back to you for future business, buying their next home, refinancing, and so forth. Now, how can you connect to this information? What can you do next? What are some ideas? What are some takeaways? So Down Payment Connect, which you can find at downpaymentresource.com/DPC, that is a lead generation tool that you can subscribe to, or it is already free for members of our MLS partners. I'll show you who those are in a moment. But Down Payment Connect gives you a personalized landing page where consumers come search for down payment assistance. There's no limit to the traffic or the leads you can generate. You are not buying leads. You are using your landing page to supplement your marketing, to point consumers there, and to compel conversation by giving them a way to search for down payment assistance where they want to buy a home. It comes with marketing tools. It comes with social media training. And loan officers, you also, in the loan officer version, you get a directory of all of the programs and their details across your state or states if you're licensing multiple, up to 4. You can customize which programs display. You can compare multiple programs in a back office search tool. So that is one way you can start to connect with consumers and educate them about down payment requirements and down payment assistance. It's $24 a month for a real estate agent, $39 a month for a loan officer version, and it is free if you are a member of one of these MLSs. So do not pay for Down Payment Connect if you are an agent and you are a member of one of these MLSs. You already have it. It's waiting for you. It's free. There's no upsell. There's no freemium model. You have it as part of our partnership with your MLS. So HAR in Houston, Real MLS in Jacksonville, California Regional, Greater Alabama in Birmingham, Spokane Association in Washington, MIBOR in Indianapolis, Austin, Texas, Northwest MLS in Seattle, Central Virginia Regional in Richmond, Real Comp in Detroit, One Key in Greater New York City and up the Hudson Valley, Greater Lansing in Michigan, FMLS in Atlanta, North Star in the Twin Cities, MLS PIN in Massachusetts, and Stellar MLS in Florida. If you are a member of any of those MLSs, you already have down payment assistance program information integrated into your listing system. Look for the down payment button on your listings. It's a $sign with a little check mark on it. That's on single line views, agent detail views, and in client views. And also, you have access to Down Payment Connect for free. Log into your MLS dashboard, click on Down Payment Resource, and your Down Payment Connect link is waiting for you there, along with marketing resources. If not, again, you can subscribe to Down Payment Connect at downpaymentresource.com/DPC. Lenders, we have enterprise solutions as well. If there are any enterprise representatives, product development, capital markets, sales and marketing leadership, and so forth In addition to Down Payment Connect, which is for the individual loan officer, we also have enterprise tools for lenders. We have a DPA directory, which gives you access to all of the programs across your lending footprint and all of the details about them. And then that sits on top of a loan officer portal, an underwriter portal, and a consumer portal for lead generation. And we can talk more about those if you think your company is interested. So I have left hopefully a few minutes here, a small few, for Q&A. We can stick around for a couple extra minutes, but if you have questions after this webinar, you can reach out to us at info@downpaymentresource.com. And again, if you are not a member of one of our MLS partners, you can subscribe to Down Payment Connect at downpaymentresource.com/DPC. If you are a member of one of our MLS partners, thank you for joining. Thank your MLS for our partnership, and go get Down Payment Connect for free. With that, Mel, Tracy, what's going on in chat, Q&A? It looks like it's been pretty busy.
Sorry, Sean, I was in the middle of typing. No, we've had a super energetic crowd. This has been awesome. I am still, there's questions still coming in. I have highlighted a couple in the Q&A panel that I thought would be good questions to answer live. But as always, I will go ahead and remind everyone that we are recording this and we will get that out to you. We've had that asked quite a bit, and we'll include this recording along with the slides for everyone that registered today. So don't worry, you will get follow-up information. And then I haven't really had any commonly asked questions, Sean, but like I said, there's a couple in Q&A that I thought would be great to answer live.
Okay. All right. So let's see. Renee asks, is there a list showing which lenders provide DPA programs, or do we have to ask each individual lender? So we do provide a list of participating lenders in a number of ways. Any one of you on this webinar can simply go to downpaymentresource.com and do a search for programs, find out what's out there in your market, pick a city, a county, even an address. And when you get your list of programs, you can open up the details of each one. And the first thing we show you is who the participating lenders are for that program. It's often a link to that list on the program provider's website. So that's one way to find out. We certainly, as we mentioned during the webinar, recommend that you contact your existing loan officer partners and ask them what they participate in. And then maybe if you still need help, go to the DPA provider or go to your broker or your peers and ask them if they have a referral to an LO that works with down payment assistance. We would also encourage you to go to that Down Payment Insiders group on Facebook and join that, network there, and see if you can find a loan officer that way. All right, Cassia asks, if a buyer is doing conventional financing but with an ITIN, can they still apply for down payment assistance? So there are some programs with varying or more flexible citizenship requirements. You'd have to, I would refer you to the loan officer that they're working with, and first of all, ask them if they offer any down payment assistance. But even for future reference, ask them if they're familiar with the citizenship requirements for a particular down payment assistance program. That's going to vary by program. It's not going to be as common as some other scenarios, but there are some programs out there that have a little bit more flexibility on citizenship requirements. Israel asks, where would I go to be certified as a homebuyer assistant loan program? Certified as a homebuyer assistant loan program. So Israel, I don't know if you're a real estate agent or a loan officer, but I would say, if I understand the question, or maybe I'll give you a couple answers here. If you want to teach homebuyer education classes, then talk to DPA providers and talk to the providers of those homebuyer ed classes and see how you get certified to do that. You can also work with DPA providers to be certified trainers for them, where you can go, host, buyer classes, or if you're a loan officer, host education for real estate agents. Those are certainly some options. And I apologize, Israel, if I'm not answering the question appropriately, but let me know if I misunderstood. Lena asked, could you repeat how to connect to DPA Connect? So I actually have the URL on the screen here. If you are not a member of one of our MLS partners, you can go to downpaymentresource.com/DPC. However, again, do not pay for Down Payment Connect if you are a member of one of, I'll put the list on the screen, one of these MLSs. If you are a member of one of these MLSs, log into your MLS dashboard, and they're all different, but somewhere on your MLS dashboard, you will see a link to Down Payment Resource, or DPR. That's us. And once you click on that, you'll be on your Down Payment Resource dashboard. And right there waiting for you will be your Down Payment Connect link. It's ready to go. Let's see. Jacqueline, whoops, sorry. Let's get the contact info back here. Jacqueline asks, is there a limit to the sales price for a down payment assistance? Yes. And you also asked, what's the usual sales price that uses down payment assistance? There's no one answer to that. That's going to vary widely by market, by geography. Most programs do have a maximum purchase price limit. They typically reflect the median home price in the market or higher. They are surprisingly flexible. Even your state's purchase price limits can be surprisingly flexible, but they're different for every program. They don't all follow the same formula, even in the same market or the same state. And then Jacqueline also asked, will interest rates be impacted by the use of down payment assistance? What are the fees associated with down payment assistance? Most DPA programs don't have any additional fees. In fact, they're sort of by their nature designed to limit the addition of other fees. There are some programs, typically from your state housing finance agency or a local housing finance agency, that use bond or TBA funding. And it's typically the TBA funding. I won't get into funding mechanisms here, but there are a number of ways that down payment assistance programs are funded. The state and the housing finance agency programs, some use a certain way of funding them called premium pricing, where the interest rate is a little higher, and that funds the availability of the down payment assistance money. So those small few programs do impact interest rate, but that's not a general rule across all DPAs, and it's not the only way to fund them. And then Jacqueline also asks, where do I find the homebuyer education course? Same place you find lenders. So whether you're using Down Payment Resource inside your MLS, or you get a lead from Down Payment Connect and you get the program details there, or you even just go to downpaymentresource.com and do a search there. When you click on the details of a program, the first thing we show you is who their participating lenders are. The second thing we show you is where to go to complete the homebuyer education course requirement, if applicable. Okay, Maurice asks, my buyer wants to buy a 1.5 acre property. Is there a limit on land size for rural property? I presume you mean, can they use down payment assistance? That will vary too, but I think 1.5 acres is probably not going to exceed the requirement. I believe 5 acres is still a benchmark for just most, conventional financing options. Down payment assistance programs typically are going to defer to first mortgage requirements on something like that. They're not typically going to have a specific acreage limitation. That said, most conventional first mortgage financing is going to look for 5 acres or less typically. So now it also has to be, it can't be a ranch, can't be an income producing property, things like that. So I would talk to your loan officer about that and inquire about first mortgage financing limitations there. Let's see, Ray asks, how do we become certified to be a DPA agent? So Ray, there are some certifications or accreditations out there, but most DPA providers, in fact, nearly all of them, they don't require the agent to be certified. They do require that the lender be approved by the DPA provider in many cases, but for the agent, that's not often a requirement. So really, you're becoming competent and confident by way of educating yourself about these programs. And you can do that through loan officer partners and the DPA providers themselves, as well as through our platform. You can certainly learn about the programs and their details and guidelines through our platform, but there aren't a lot of certifications out there to get certified as a DPA agent. nonetheless, where they do exist, they're great opportunities to just go educate yourself and become more informed. But they're typically not a gating factor to be able to use down payment assistance or participate in a transaction with down payment assistance. Let's see. Maurice asks, how can we become a lender for down payment assistance? So I just addressed the agent side. That's not typically a requirement. For lenders, the lender typically needs to, two things need to happen. The lender has to choose to participate in a given program, and every lender has a different appetite for down payment assistance and products in general, right? I mean, some lenders are jumbo lenders, some are non-QM lenders, some are retail, some do various types of down payment assistance, some do other types of down payment assistance. So my point is, every lender has their own appetite for down payment assistance, and they choose which programs they want to participate in, and then often have to go get approved by the down payment assistance provider, certainly from like the state level. Now, there are some local DPA programs that maybe don't have any sort of cumbersome participation requirements, but Maurice, I would recommend that you, if you're a loan officer, that you talk to your product development team. And if you're a mortgage broker, talk to your wholesale partners and see what they allow. If you're an agent and you're asking on behalf of a loan officer, then I hope that answer helps. Let's see. Olivia asks, how is Down Payment Resource funded? Just curious. Are you a nonprofit? No, we are not a nonprofit. Open book. Our customers are largely MLSs and enterprise lenders, and then of course we have the Down Payment Connect product as well. Let's see. Sandra asks, how does an agent know if they're under DPA? I took the class, but I wanted to make sure I'm on the list. I'm not sure I follow, Sandra. So you took a class, that's great. You're more informed. I presume you mean like some sort of agent training class. I'm not sure I understand though, how does an agent know if they are under DPA? Maybe you can clarify that. Let's see. And with that, I think we've answered a lot here. We've gone over our time by several minutes. I think maybe we'll call it here. And then Mel, based on anything that you've seen in chat or Q&A, or Tracy, anything you want to add here before we close it down?
Sean, I did have one person ask a question. Stephen asked, what is the minimum percent that a homeowner must have to put down? And does that vary by the program that they choose?
Well, that's the first driver is going to be their mortgage. So FHA, you got to have 3.5% down. USDA for an eligible property, or a VA loan for an eligible veteran, 0 down. If you're doing conventional, there are some 3% down options or 5% down options. Then if you're talking about using down payment assistance, the amount of assistance is obviously going to vary by program, but they're typically going to defer to first mortgage requirements as far as the required down payment. So I think that answers the question. Anything else? Any final takeaways or trends that you're seeing, Mel or Tracy?
That's good for me. Thank you, Sean.
All right, Mel, any final takeaways?
Nope, that's good for me too, Sean. Thank you.
Okay, well, thank you all for joining us today. I hope that was helpful. If you have any further questions after the webinar, reach out to us at info@downpaymentresource.com, and have a wonderful day.